Hello everyone, I am Ankit and you are watching StudyIQ IAS English channel. In our today's video, let us try to ascertain whether or not there is an end to global hegemony of US dollar. And why are we discussing the end of global hegemony for US dollar? Because the value of dollar in recent times have actually reduced. You may have heard similar thing about Indian rupee or any other foreign currency, but you'll never have heard about decline in the value of US dollar. But due to policies brought by President Trump, the value of dollar has actually eroded or it has actually reduced. So how will it impact Indian currency? How will it impact global economy? How will it impact US economy? Let us try to understand everything in our today's discussion. Now the notes for this session, I will make it available as usual on my Telegram channel that is called as ATS Live. So if you haven't still subscribed it yet, please do not forget to subscribe and register for my Telegram channel and then downloads the note on a daily basis. Now the context of our today's discussion is recently Donald Trump brought a very new trade policy which was a different from trade policies followed by previous presidents known as imposition of tariffs. Now, what are tariffs? Tariffs are basically customs duty that the US government will levy on any import originating from other countries and into US market. Now, naturally, such type of disruptive policies will lead to fallout primarily for US economy. And you understand, as US economy is world's largest economy, it also will affect other economies, including India. Now, we'll witness in our today's discussion how this kind of a policy will shift the investors or global investors' behavior. It will have implications for the value of US dollar, which we are certain and we know that it is going down right now. It will affect the bond markets, particularly of US government bonds, and also it will lead to movements of various different currencies, including Indian rupee. So let us try to ascertain one by one why is this happening and how will it impact India and other countries. Now, what is happening? First, you have to realize that the value of US dollar is weakening, which is very unrealistic or very hard to believe. Now, why is this US dollar weakening? Because despite Donald Trump pausing his trade war escalation, that he escalated trade war by imposition of tariffs on many countries, including India, now Trump has highlighted that he will go slow on this kind of a policies for a few months. After that, it is assumed that he will resume such kind of a tariff imposition. But this has actually eroded the value of US dollar, and the value of US dollar, which you can ascertain by various metrics, the most important metrics is a dollar index. Now, for example, to ascertain the levels of inflation in Indian economy, you follow an index known as consumer price index, which actually estimates the inflation in different commodities based on their respective weights in the consumption levels of consumers. Similarly, to ascertain the value of dollar and how it compares to other currencies, there is a dollar index which tracks the value of US dollar relative to baskets of foreign currencies, because US economy, it not just trades with Indian economy, but it trades with other countries also, and it trades them in different various quantities. So to estimate these quantities, we take a weighted average of basket of foreign currencies, and that index is called as dollar index. Now, this dollar index, it actually was down over 3% last week, and it fell down below the levels of 100 to the first time since 2023, and it fell down to levels of 99.70. To put things in perspective, this one was 105 only last month. So it has fallen more than 5% in 1 month itself, highlighting reduction in demand of dollar, and naturally it led to reduction in the value of dollar. Now, why is this unusual? Now, usually, what is the mindset of global investors? What is the mindset of global government? That whenever there is a global market volatility, that is highlighted by increase in VIX index. So, increase in VIX means increase in volatility. So, what investors try to do? They try to protect their investment, and to protect their investment, they flock to the most stable currency that have been there in the world economy, that is US dollar. Because it is assumed that US economy being the world's largest economy, US economy is backed by the might of US administration, US government, US military, which by far is world's largest. So naturally it will promote, or it will not lead to reduction in the value of dollar. So during time of any market crisis, market volatility, investors usually buy dollar and sell other foreign currencies. So at that time, usually what happens that the value of rupee, value of pound, value of euro, all of this will reduce. Wherever the value of dollars will stay float, or it might also increase. So this is the usual circumstances. But this time what different happened, that investors are doing the opposite. They are moving their investment away from US dollar, and then they are buying gold, or they are buying other foreign currencies like Swiss franc or Japanese yen and even the euro. So this highlights that the demand for US dollars has reduced, and when demand of any commodity, be it gold, be it dollar, reduces, its value also reduces. So therefore it has led to fall in the value of US dollar. What are the factors behind this pulling out of investments out of US leading to reduction in the value of dollar? I will tell you not to worry. Now this on a larger picture, it suggests that there is a breakdown in the confidence in US economy, which is quite unusual, and that is why I have highlighted this is an unusual circumstances. Now, how withdrawing of investments from US market, from US dollar, from US government bonds, how it impacts the US government? Let us try to ascertain this. Now, investors, they are also selling whatever they have invested in US government securities known as treasury bonds, right? Indian government bonds are known as government securities, US government securities or US government bonds are known as treasury bonds. Now, when bonds are sold off, you understand the bond prices reduce and the yields rise. If you don't know it, let me give you a very simple example. Suppose US government issues a treasury bond or a government securities of value US dollar 100, right? And it says after 10 years, I will pay you an interest of say $10 for this investment, which means the value of bond yield or return on this investment for an investor becomes 10%. So this is the bond yield that any investor will get after they have invested in the security of US government. Now suppose the investor of this particular bond requires to sell off this investment because he might need this money for some other purposes. So he might sell this treasury bond at $95 to another investor, but the investors who has bought this bond with a face value of $100 at a discounted rate of $95 eventually will also get the return on investment, that is $10. So which means his final return will be how much? $110, which pushes up the yield more than 15%. So you understand, as the bond prices of US bond has reduced, it has led to increase in bond yield from 10% to more than 15%. So this is how bond prices and bond yield, these are inversely related. Understand this concept. So this has led to prices or fall in the bond prices of US government treasury securities and rise in the yield of government securities of the United States. Now this spike in the yield of government securities of United States government is the biggest weekly jump since 2001, and this has actually reduce the sentiments in favor of US market. Particularly investors, they are apprehensive of investing their money in US market, and that is why they are pulling off all their investments. They are pulling out of their dollar investments, they are pulling out of their investments in treasury bonds or the government securities of the US market, right? Now, why is this a problem? First, this is a problem for US government. Why? Because traditionally US government are typically safe and widely held securities. Because of this, these are also known as gilt-edged securities, because the investors, they are quite certain US government or US economy is the world's largest. It is backed by might of US government. So my money that I have invested in US bond, it is safe and secure. So foreign governments, including India, including China, including Japan, they invest heavily in the government securities of US market because they trust the US bonds, because it is backed by the world's largest economy and world's largest military, right? But recently what we have seen, that there is a loss of confidence in the ability of US government, which means that the demand for these bonds have reduced, and when demand for these bonds have reduced, it has led to reduction in bond prices, and naturally, as bond yields are inversely related to bond prices, it has pushed up the bond yield. Now that the yield of bonds has increased, now whenever US government will issue newer bond, it has to pay higher interest rates on these bonds. So when any government has to pay high interest rates on these bonds, which makes borrowing costlier for that government, and similarly borrowing for US government will also become costly and expensive. Now whenever government takes borrowing from the market, it usually uses this money to fund its other expenditure like social security expenditure, like medical insurance, everything. So naturally all of this will become quite costly for US government because it has to offer higher interest rates. Also, US government has a overall 35 trillion in bonds, which means the US government debt in form of bonds is 35 trillion. So this is a very big deal, and in case the yield on these bonds increase, so naturally the interest payments of US government will also increase. So that is why the climate globally has become quite uncertain, and that is why investors have sold off their investments in US market. Now I told you how is bond yields related to currency value. Let us try to find that. Now whenever any bond yield, for example the bond yield of US increases, it actually is a signal of attraction for foreign investors, because I told you whenever bond yields increase, it means any investor will get a higher return, right? So who want to make larger amount of money, right? So whenever bond yield increase, traditionally it leads to attraction in foreign investment. So therefore foreign investments like foreign direct investments, like foreign portfolio investment, they increase in any market. But what you have to understand that this time the yields in US government bonds, they are rising out of fear and not out of confidence in US economy. So that is why investors are not investing their money in US market, rather they are pulling off their existing investment, which has reduced the demand of dollars, which has reduced the demand of government securities of US government. Therefore, it has led to reduction in the value of dollar as well as government prices, right? Now, as investors are pulling their money out, it has led to reduction in demand for US dollar. Therefore, the value of dollar is also weakening. So this is a vicious cycle that the US has entered, because the confidence of investors in US market has reduced. Therefore, they are pulling out of their investment, and whenever they are pulling out of their investment, the demand for dollars, the demand for government securities reduce, and naturally their value, their prices also reduce, right? But what has led to such significant sell-off in the US government bonds and the US dollar? Let us try to ascertain this. First and foremost is the Trump's policy of imposing tariff on all the imports that are coming into US, and also the fears that other countries might also follow and retaliate against US, which will lead to escalation of this chain. So when US imposed tariff on Chinese goods, China imposed return or reciprocal tariff on US goods, and naturally President Trump has threatened it will increase the tariff. So what is the consequences of increase in tariff? It will automatically increase the prices of the goods that are available in US market. So suppose if anything was imported from China at $10, now the cost of that commodity will increase to $11. So it will lead to what? Inflation in US economy. Now whenever there is an inflation in any economy, people will have to spend more money just to get that same commodity, which will lead to reduction in disposable income of people. And whenever there is a reduction in disposable income of people, it leads to overall reduction in consumption levels in economy. And whenever there is a reduction in the consumption levels of the economy, there is a reduction in demand for goods and services. And whenever there is a reduction in demand for goods and services, you understand automatically it will lead to reduction in your GDP growth, and sometimes it can also push your economy into recession. So this is how this tariff policy eventually will lead to slowdown in economic growth of US. It will lead to probably to recession in the US market. So this is the consequences of how such policies reduce your economic heft. Now, what is the problem that the US Federal Reserve, which is responsible for managing the monetary policy of US, will do? Now, whenever there is a decline in US economy or any economy for that matter, the country's central bank, they have a tendency to reduce the interest rate, which in US context is called as federal rate. But the consequences of reduction in interest rate is that money supply will increase and it will lead to increase in inflation. So US government or US Federal Reserve can't take this particular measure. So when the inflation levels are high in economy, the US Federal Reserve might increase the interest rate to control the inflation, but it can't also do so. Why? Otherwise increase in inflation rate will increase the prices of loans and therefore it might lead to slowdown in the US economy. So that is why I've said that is why I've said it has led to policy confusion when it comes to Federal Reserve, that if it reduces the interest rate, it will increase the inflation levels to an uncontrollable value. Similarly, if it increases the interest rate to control the inflation, it might slow down the US economy further. So this has actually eroded the value or eroded the trust in the Federal Reserve, which is an US based institution. Similarly, to bring the economy out of recession, what the government usually does, that they increase their spending overall, which means spending increases on increase in welfare spending. Spending might increase on increase in infrastructural spending or spending in military. And also it might lead to increase in spending for providing subsidies to industries who are affected by increase in tariff, right? So overall the spending levels of US government is expected to increase because of this slowdown in the US economy. Now I told you the value or the demand for US bonds has reduced, so US government to borrow more money to fulfill the spending obligation will have to incur more debt, and this will also lead to increase in US debt, which eventually will lead to concerns regarding the financial health of US government. So this is how there is a problem with US economy. To bring economy out of recession, it has to increase its spending, but the consequences of this increase in spending, that US government will have to offer more interest on its loan, naturally increasing your overall debt and overall interest payments. Also, as I told you, that there is a confusion regarding the Federal Reserve, what kind of a policy approach it will incur. Therefore, it will erode the overall trust in the US institution, because US institutions were known to be effective. Federal Reserve had an independent objective regardless of what government thinks, but now when government will push the Federal Reserve to reduce the interest rates so as to promote the economy, this will lead to inflation. Otherwise, to control the inflation, they will have to increase the interest rate and this will lead to recession, right? So this is how the trust in the US institutions have eroded. Now let us understand how it will impact global economy and Indian economy. First impact, that the safe haven status that the US has will obviously be lost. So therefore, the demand for US dollars, the demand for US government securities or treasury bonds will reduce. Therefore, the value of these two commodities will reduce. Now, there are many countries, including India, who hold such significant value of foreign currencies in their foreign currency reserves. They have such kind of debts with the banks also. So naturally, this will lead to global financial realignment, because countries who are holding large amount of US dollars or holding large amount of US government securities as in their forex reserve, they'll try to diversify their investments in purchasing other currencies. They will purchase yen, they will purchase pound, they will purchase euro, they might purchase other currencies like yuan, right? So therefore, it will lead to global realignment in the global economy. For example, for forex transactions, they will rely on other currencies. Similarly, for trade, the most commonly accepted currency right now was what? Right, US dollar. That you regardless trade with any other country, they will demand, please pay me in dollars, not pay me in local currency or not pay me in your currency. But now when the demand and acceptability of dollars is expected to increase, naturally the countries will move towards their own domestic currency. Case in point, what India and Russia are doing currently. India and Russia, they are not trading in US dollars, rather they are trading in their own currencies, that is rupee and ruble, right? So similarly, other countries will also start trading in their domestic currency, and this will lead to global financial realignment away from US dollar. Now, what about value of Indian rupee? So naturally, value of Indian rupee is pegged with other currencies. Most importantly, it is also pegged with US dollar. So whenever the value of US dollar declines, naturally it will lead to appreciation in the value of Indian rupee. And when appreciation of value of Indian rupee happens, there are two consequences. The value of imports of Indian will reduce, so naturally imports for us will become cheaper. However, exports, that is exports out of India, just because the value of rupee is increasing, it will become more expensive, right? So when exports become more expensive, naturally we will also see reduction in the overall export levels. And as US economy, which is a major trading partner of India, is also witnessing economic slowdown, so therefore India's exports to US will also suffer, which means overall it will have a negative impact on the Indian exports to other countries because of two factors: because of recession in US economy and because of rise in value of rupee. And rise in value of rupee will make your products more expensive and less competitive. Also, major emerging markets like India, they depend heavily on foreign investments from countries like US. But when even US economy is facing recession or is facing economic slowdown, naturally the companies existing in US will also face slowdown, and this will lead to reduction in the foreign direct investments, reduction in the foreign portfolio investments in emerging markets like India. So that is why this will bring more or less a negative impact on global economy, including India, that despite some green signals like increase in value of rupee or control in its depreciation, overall it will lead to negative impact. So the biggest question in our today's discussion: is this the end of US dollar hegemony? The answer is, technically it is not the end, but rather it is a test for integrity of US dollar. And in recent times we have seen that the trust and the integrity that the people and investors held in US dollar has reduced, and it is the result because of the policy changes made by the US President Donald Trump, that these erratic trade policies, these erratic foreign policies, these erratic fiscal policy, these erratic monetary policy actually sends negative signals to the market. Therefore, earlier there was this trend that whenever global economy is in recession, global economy is in volatility, investors usually used to invest in US dollar. They used to invest in government securities. But now reversal to this trend is to be seen. As we have seen, investors are removing their investment from US market and depositing them to other economy like Swiss franc, like Japanese yen, etc. Also, this will impose a broader risk on market volatility, because we have seen with reduction in the value of dollar globally, including Indian stock markets, they fell. So naturally it led to erosion in the value of the investment that we have made. It will affect countries, currencies, it will affect the commodities like bond, gold, and it will also affect the debt market worldwide. So let us quickly ascertain this with the help of a table. Now, what I was able to say earlier, the demand for dollar was very strong because countries used to store them in their forex reserve, country used to use them for their global trade, right? But now this has falling sharply because now countries are looking to invest elsewhere. They are looking to diversify their investments in foreign exchange reserve. They are looking to trade in their local currencies and not US dollar, and that is why the value and demand of US dollar has fell sharply. Similarly, as I told you in this earlier, there was this trend of flight to safety. So because whenever there was this global recession, it led to higher demand for government sort because of flight to safety, right? But now this trend has actually reversed. Now the demand for US government bonds has reduced because government and other agencies who are increasingly investing in US economy, they are looking to invest elsewhere because they do not trust the US economy. So therefore, US economy, which still is the world's largest economy, its trust was quite strong earlier, now it is eroding. And because the value and the trust in US institutions and US economy is reducing, so people are investing elsewhere. So therefore, the demand for US dollar reduced, the demand for the US government bonds reduced. Now, what about other commodities? What about gold? What about other currencies? So demand for these commodities were moderate earlier. Now they are surging because investors, naturally they have to invest somewhere. When they are not investing in US dollar, when they are not investing in US government bond, they will start to invest in gold. They will start to invest in foreign currencies, right? So on the bigger picture, this reflects the test of integrity of US dollar, and from the current trend we are seeing that the integrity of US dollar is falling. The integrity of US dollar or US institutions have actually reduced. Therefore, it has led to the question that is this the end of dollar hegemony? Now the biggest question is, if President Trump doubles down on this kind of an erratic policies, if he does not stop levying these tariffs on other countries, it will further lead to decline in the value of dollar. But if this kind of a policy actually reverses, that if Donald Trump stops levying of tariffs, the value of dollar might increase in future. So this is an ongoing development. We will look at it in the future also, and before leaving this particular session, I will want you to solve this PYQ, and you can give the correct answer for this PYQ in the comment section, and the notes for this session I will make it available on my Telegram channel, that is ATS Live. And also for ongoing developments regarding this or any current and contemporary development, do not forget to subscribe to our channel, and also please hit the like button. I'm taking this video at 9 p.m. So I'll take your permission. Please allow me. Have a very pleasant good night, and we'll see each other again. Until then, please allow me and have a very good night.